Hello there, welcome to the second part of this beginner's guide to Forex trading. I really appreciate you taking your time being with me and watching this series. If you've joined this series here, then please go back and watch part one. There'll be a link below. If you're on my website, you can go to the previous page and watch part one. This is part two. In part one, I went through what Forex trading is. And in this part of this series, we're going to look at why you should trade Forex. And by the end of this video, you'll know what Forex is, or the basics of what Forex trading is, and the basics of why you should trade Forex. So a big welcome to you again. Thank you so much if you've got this far, if you've watched part one and are now on part two. If you're watching this on YouTube, great. If you're not and you want to go to YouTube, just search me on YouTube, Love the Pips, or Samuel Morton Forex, something like that, and you'll see me pop up. If you want to watch this on the website, my website, which I suggest you do, just go to love-the-pips.com. Now, I went through this slide in the previous video, so I don't plan on going through this slide again. All I will say is, out of the many Forex educators there are out there, I am the real deal. You know, I trade Forex. My main income isn't through Forex education. It's actually through Forex trading. I have verified results. I am a Forex trader. You know, what else can I say? It's what I do for a living. I actively trade and I publish verified results of my trading, which is very uncommon in the Forex education industry. So Forex pricing, this is what we're going to look at first, and this should answer the main reason why you should trade Forex. So the first point on this slide says currencies fluctuate in price. So currencies can appreciate and they can depreciate. And you should know that by watching the news. You know, the pound is strong or the US dollar is weak. And you should know that by going on holiday. You know, when you go on holiday and you have to change your local currency into the currency of your holiday destination, sometimes you'll get a really good exchange rate, sometimes you won't. I go to France every year. I'm not getting as many euros at the moment as I did 3 or 4 years ago. And the reason for that is currencies change. The value of a currency changes. They appreciate, they depreciate, and they fluctuate. And the great thing about these fluctuations is you can make money. It provides an opportunity to buy currencies and sell them at a better price. So just like a stock trader who might buy Apple shares and then plan to sell them at a later time when they're worth more, you can do the same with currencies. You can buy euros or pounds and then sell them when the euros or the pounds are worth a bit more. Now, as mentioned in my previous video in part one, Forex is traded in pairs, and here we have the Australian dollar, New Zealand dollar, the Canadian dollar, Japanese yen, the euro, US dollar, and pound, US dollar. So currencies are always in pairs, and they're always in these acronyms, these 3-letter acronyms. So Australian dollar, New Zealand dollar, Canadian dollar, yen, euro, US dollar, and pound, US dollar. Now, the reason why these currencies are in pairs is you cannot value or price a currency unless it's compared to another currency. How much is the Australian dollar worth unless you compare it to the US dollar or the pound? So that's why they're put in pairs, is so you can price them against each other. And what you'll have, and I'll show you in a moment, but what you have is Australian dollar, Canadian dollar, Australian dollar, Swiss franc, Australian dollar, yen, Australian dollar, New Zealand dollar, Australian dollar, US dollar, and the list goes on and on. So the first currency in a pair is the base currency. So looking at these pairs up here, Australian dollar, New Zealand dollar, the first currency here is the Australian dollar, so that's the base currency. If we look at the other pair, euro, US dollar, the euro is the first currency, so that is the base currency. Now, the base currency means for one base currency, what do you get of the paired currency? So going back to this first pair, Australian dollar, New Zealand dollar, for one Australian dollar, what do I get in New Zealand dollars? For 1 Canadian dollar, what do I get in Japanese yen? For 1 euro, what do I get in US dollars? And for 1 pound, what do I get in US dollars? So the first currency in a pair is the base currency. Now, prices are often quoted in hundredths of a currency unit, which is called a pip. So I always like to think of pounds and US dollars because that's what I'm used to on the radio. That's what they report, a lot of pound against the dollar. And lots of currencies are compared to the US dollar. So at the moment, if I just look on my trading platform, the pound US dollar is currently at 1.3126. So $1.31.26. And we have some prices down the bottom here. So on the radio, you might hear that the pound is worth $1.31. On actual trading platforms, when you come to trade the Forex markets, it actually goes down to 1/100th of a cent. So you have $1.3125, for example. And there are some examples here. So Australian dollar, US dollar. For 1 Australian dollar, you'll get 0.7015 US dollars. For 1 pound, you'll get 1.6958 Canadian dollars. So this is hundredths of a cent. US dollar, Swiss franc. So for 1 US dollar, you'll get almost 1 Swiss franc, 0.9941, just short of 1 for 1. Now there are some currencies that aren't in hundredths of a cent or hundredths of a unit. They're generally like the Japanese yen, Mexican peso, but you'll pick those things up as you progress in your knowledge and understanding of the Forex markets. Now each time price changes, it generally moves in pips. So if Australian dollar, US dollar, currently it's at 0.7015. If it moved to 0.7016, then price would have moved 1 pip higher. So 0.7015 to 0.7016, it's moved 1 pip. Let's say it then dropped from 0.7016 to 0.7010, it would have dropped 6 pips. Pound Canadian dollar, 169.58. If it goes to 169.59, it's gone up by 1 pip. If it was 169.58 and it drops to 169.50, then it's dropped by 8 pips. So each one of these hundredths of a cent is, or hundredths of a penny, whatever you want to call it, is usually referred to as a pip. And this is just a general rule of thumb. There are exceptions, like I said, Japanese yen and other currencies too, but mainly this is what you'll be dealing with as a Forex trader. US dollar, Swiss franc, 0.9941. Let's say price moved up to 0.9950. It's actually appreciated. It's moved up by 9 pips. Now, to just demonstrate this to you, what I'm going to do, let's just bring this down. So here we go. You'll see in this market watch box here, I have loads of currency pairs. So Australian dollar, Canadian dollar, Australian dollar, Swiss franc, Euro, Canadian dollar, Euro, New Zealand dollar, US dollar, yen, pound, New Zealand dollar, pound, Japanese yen. There's all these currencies that can be traded, and then you'll see the price next to the currency. So Australian dollar, Canadian dollar is currently at 0.9185. Australian dollar, Swiss franc, 0.7034. So for 1 Australian dollar, you get 0.7034 Swiss francs. Now you'll see that these prices are always changing. Prices are always moving. Currencies are weakening or they're strengthening. But this provides an opportunity to make money. And that's what Forex trading is all about. No matter what I say about the reasons why you should trade Forex, the main reason is you can make money from the Forex industry. Now the best thing for you to do is to open a demo account with a broker or bring up prices on Google of currencies and watch the fluctuations. watch the pip movement, look at currency pairs. I can spend hours teaching you all this stuff, but you'll learn a lot more if you actually go and put some of this stuff into practice and start using some initiative and looking at these things yourself. So why trade Forex? Now, I've separated these reasons into two categories. One is the career, and one is why Forex has advantages over other financial markets. Because you might be interested in commodities, you might be interested in stocks and shares, as well as Forex. So why trade Forex? You can earn a significant income through trading Forex. I earn more today than I ever thought I would earn. My annual income is far greater than I ever expected for myself. And this is all because of Forex trading. And you can do the same. You can earn a significant income through trading Forex. And that's the main reason why people trade Forex, is the potential income. There are other reasons too, such as working from home, being your own boss, choosing your own hours. You could trade every morning and have the afternoon and evening off. So there are some great advantages to having Forex trading as your career. As being a Forex trader, it's a fantastic job. I love it. There are some advantages to trading Forex over other financial markets. The Forex market is open 24 hours a day, 5 days a week. So Monday to Friday, or here in the UK, it's Sunday evening to Friday evening. The Forex market is open. So no matter what your schedule is like, if you're working full time, if you're a student, if you have part-time commitments, whatever it is, you can still trade Forex, especially the beginning. As a beginner, you can fit Forex trading around your schedule. Things like stock trading, commodity trading, they have set hours a day. And if you want to trade US markets, for example, but are based in Europe or somewhere else in the world, it can be very difficult to fit trading around your daily routine. Something else that Forex trading offers that's very unique is you can trade with very little. You can open an account with $100, £100, and you can trade that and trade any currency pair. That is very unique with Forex trading, and is not really possible with indices and stocks and shares and commodities, unless you're looking at spread betting or something like that. But that's a whole other topic that we could go in another time. The Forex markets are highly liquid. Obviously, to sell, you need to have a buyer. If you want to buy euros, you need to have someone who's going to sell euros. For retail traders like myself and you, there is always going to be a buyer and a seller. The difference between the current price of the market and what you're going to buy and sell at is going to be very similar. If you're looking at markets that aren't as liquid, perhaps some specific stocks and shares, commodities at certain times of the day, that spread's going to be very wide. Even cryptocurrencies, I've noticed lately, the spread can be very wide. There's not sufficient buyers and sellers in the market. You really have to buy and sell at prices that isn't the current price quoted on the financial market. The opportunity in Forex trading is amazing. Once you realize you can make money trading Forex, the world's your oyster. Uncapped earnings. There's so much opportunity here, not just in making money from the market, but once you can make money, you can teach others how to make money. And the industry is huge. There are lots of different avenues you can go down. I'm a technical analyst for a Forex broker, as well as an educator and a Forex trader. There's lots of opportunity within the Forex market, lots of career paths that you can take. Also with opportunity, there always seems to be opportunity to buy and sell within the Forex market. There's always one currency that's moving, which you can make money on. With stocks and shares, if you're specializing in energies or banking or something like that, there can be long periods of quietness where there just isn't much opportunity to make money. You can make money in either direction. So going back a slide, if you're looking at Australian dollar, New Zealand dollar, if you think the Australian dollar is going to strengthen against the New Zealand dollar, then you can buy Australian dollar and sell New Zealand dollar. But if you think Australian dollar is actually going to fall, it's going to weaken, you can actually sell Australian dollar and buy New Zealand dollar. So no matter which way the chart is going, if it's moving up or moving down, you can make money from that. Once again, as mentioned in the previous video, if you have questions, feel free to drop me an email, info@love-the-pips.com. That's info@love-the-pips.com. There is another part to this series. In the next part, I'll teach you how to trade Forex. So we have the what, the why, and the how. I'll see you in the next video.